Good morning, everybody. I think that lady beat me today. This new pet hate of mine, the lady that comes on and tells you that the session is being recorded. And indeed, it is being recorded. It's great to see a lot of you come on racing in to get into this webinar. Really exciting stuff. Really looking forward to this fantastic opportunity to have you all. So as you come in, please let us know a couple of things. Let us know what city you are in. So say hello in the chat and let us know what city you're in, and perhaps even let us know your company. So in the chat, what city, your company name in the chat. Feel free to interact with us as we get ourselves ready for this session. So utilize the chat function, and as you do, select hosts and panelists in the chat function. Say hello, company name, and where you are dialing in from. My name is Brian. I'm from CFO South Africa. I am currently in a very sunny Pretoria. It's nice and warm out there. Allegedly, it's the first day of spring, but we'll see how that plays out. So good morning to Johanna there, Giselle from Johannesburg. We've got people in George, Western Cape. We've got Witbank. Really, really awesome. So select everyone in the chat, or the host, all hosts and panelists as well. Let us know your name. Let us know what city you're calling from. I see we are far and wide this morning. So really, really good. I think it's a tax season. Everybody is here today. I think most people are here today. So it's fantastic to have you all join us far and wide. Emma is in Middelburg. Johan also in Pretoria, so also very, very good to have you. And a lot of people from Pretoria. This is where I am too. My guests should be down the road from me, Centurion. So really looking forward to. So I think we are great advocates of tax, us Praetorians. KZN. I did say city, by the way. I don't know, Fortune. You said you're in Bryanston. I know that's in Johannesburg somewhere apparently. But good to have you all, and welcome to our session today. You know, taming your dispute frustrations. You know how it goes with SARS. So today, you know, we'll have our experts reveal the challenges that you experience with your SARS assessment. So I'm hoping that's all. You know, all of you have come forward to hear from some top tax people in the room today. So good morning. And very happy to have you all. If you stumbled on the wrong webinar, like I said, it is tax season after all. Stick around, you will definitely learn something. And I hope that does happen before we finish off our session today. So that's what's up. I had my screen on share for all of you to see, just in case, like I said, you had stumbled on the wrong type of webinar. It looks like everybody is here for the right session. So as you come in, tell us again, like I said, say hello in the chat. Let us know your name and where you are calling in from this morning. So once again, my name is Brian. I'm the community manager at CFO South Africa, and it gives me a great pleasure to welcome you all to this webinar brought to you in partnership with Unicus Tax Specialists. Unicus is a niche tax advisory service firm, so trust me, you're in good hands on the issue we want to discuss today. And while saying that, did you also know that the Office of the Tax Ombudsman recently found that roughly 94% of certain assessments raised by SARS over the period investigated lacked merit? Lacked merit, 94%, let that sink. That's really, really interesting. So this means that taxpayers should not have had to pay or otherwise deal with the consequences of an additional assessment. 94%. So like I said, let that sink in. That's a huge, huge number. So, and the process of challenging, SARS assessments, as you might all be aware of, is notoriously fraught with delays, challenges, and painstaking. You losing your hair kind of stuff. So it costs you money, costs you time. So I'm hoping that today the guys that I have with me on this call will be able to set us straight, to set us on our tax path, and a little bit of knowledge will definitely help as we proceed today. So if you want to communicate with us, please select everyone or all panelists and attendees, whichever option is showing up on your screen, so that everybody can see what you are saying and what you are asking. I would encourage you to do that. So without further ado, today I'm joined by Nico. Nico Theron is the industry recognized expert, right? He's also, by the way, also lectures as a postgraduate level at the University of Pretoria. Wikus is a tax advisor and a manager at Unicus, and he spent over 3 years at Sars. So, roped in some really good insights here. So Nico and Wikus will guide you through how to deal with the typical frustration surrounding tax dispute resolutions. From what to do if SARS stalls and the objection or appeal process that you may have to follow. And what to do if you're considered non-tax compliant status resulting in some kind of dispute. So once again, it's great to see you all here. Let me quickly introduce my guests today. I'm going to start with Nico quickly. I think I've already said a little bit about you, but perhaps I'll pass on to you to do a quick intro. Nico, tell us a little bit about yourself.
Thanks, Brian. Good morning, everybody. Thanks for joining us for this webinar. Yeah, so look, I mean, I'm a tax dispute resolution specialist, and really that's what my firm focuses on. It's challenging SARS. In fact, we wrote the book on it, quite literally, published a book last year through LexisNexis on how to resolve tax disputes and all the remedies available to taxpayers. I mean, that's what we do day in and day out. Most people don't like to fight with SARS. I wouldn't say we like to fight with SARS. I like to win SARS. The fact that there's a fight, I guess, is part of the issue. But yeah, I mean, we deal with tax disputes all the time. I think at the moment we have roughly just short of R1 billion under dispute for various clients, and this year so far, I think we've saved just short of $500 million yes. In taxes through the objection and appeal process, because well, that's what we do. So really, that's us, and that's our space, and that's our game. Wikus, over to you.
Yes, hi everybody. Like Brian said, I'm a manager at Unicus. A couple of years experience also at SARS in the enforcement department, and also the diesel excise department.
Awesome, thank you. So I'm hoping that you can hear Nico and Wikus. If you can't, let us know in the chat, but I believe most people can hear. I'm getting messages that they're loud and clear. I know we live in very challenging times, and Nico and Wikus are using the same office today. That's why you're seeing them doing the right thing, all masked up as you're supposed to during these COVID times. So thank you guys for that intro. I want to make this quite an interactive session because it's we've got close to 100 people already on this call, and to kick this off, I want to perhaps start with a poll. Start with a couple of poll questions to warm the audience up, warm us up, and see how much we know about what is currently prevailing in the tax world. So I'm going to launch a poll and start with the first question. You'll probably see it come up now on your screens. And fairly simple question. Has SARS raised any additional income tax, VAT, pay as you earn assessment the last 12 months on your company? Do you know this? Do you know if they have? That is the first question. Has SARS raised any additional income tax, VAT, pay as you earn assessments in the last 12 months on your company? Let's see what type of audience we have. I always like these polls because it gives us a sense of who we have and how we kind of direct the conversation as the session goes ahead. So, and good morning to you too, Simbarasha from Woodmead. There's a poll up. First question, has SARS raised any additional income tax assessments in the last 12 months on your company? We're just over close to 60% now. If we can hit 75, 80%, I'll be very happy. It'll be a good count of number of people that have taken part. So if we can push it up, 75, 80% to 66% completion now. Very simple question. It's a yes or no question. Either they have or they haven't. Has SARS raised any additional income tax, VAT, PAYE assessments in the last 12 months in your company? and we're very close to a 50-50 split at the moment, which is quite interesting. Come on, guys, let's push it up. Let's go to 75%. I want to get at least 70 people to complete the first poll, and perhaps some of the polls that may or may not follow in this session. Okay. Probably going to try and end the poll, but before I do that and share the results, I'm going to come to Nico quickly. Nico, on this question, we're sitting at a 50-50 split. Is that interesting? Does that interest you at all?
Yeah, it does to some extent. The fact is that Sars's audit capacity is not what I would imagine they'd like it to be. And so the amount of additional assessments they're raising is a little bit low, I would imagine, in terms of what they would like. But even at a 50-50 split, I think they're doing quite a good job in terms, because I mean, normally an additional assessment follows an audit or a verification of sorts. And so it's good to see that they're getting to at least 50% of our audience today. And I say it's good, and I mean that in the sense that, of course, my job is to fight those assessments, and we do. But it's good to see. I mean, they have to do their jobs. Of course, it's often frustrating, but that's where we come in and we try to solve it. But yeah, I think it's. I'm not too surprised by the results. If anything, I think they're doing not a bad job, given the sample we've got today.
Yeah, I mean, it's a very good sample, I think, but also, like I said, for me, very interesting that we really split in the middle. Half of us think the other way.
Half of you are lucky, the other half not so much.
The other half not so much. Okay, awesome. Okay, cool. We're gonna get a bit more tricky now with the next question. Let's see how much we know. And again, to the audience, if you have any questions, post them in the chat. We'll pick them up from there, and we'll address to my esteemed guest with me. So question 2, again, has SARS complied with all dispute resolution time periods on any objection or appeal you submitted in the last 12 months, right? I hope we've got some people from SARS here. I hope we've got some people from SARS on this webinar.
It's always welcoming to have people from SARS on these discussions. It's good to have the discussion go both sides. Interactive discussions are always good and helpful.
Absolutely.
Yeah,
this is a good question for SARS, right?
Right.
Hi, SARS, have you complied with the dispute resolution time periods?
I normally, when I do these webinars, I'll ask SARS to just identify themselves to see if there's someone from SARS. I know what to say. It's simple thing that I can't say.
Anyone from SARS, please say hello in the chat.
I'm kidding. Yeah, please do. Maybe we'll recognize you.
We're pushing ahead, traveling along. More than half of us have already responded. Thank you, everybody. And as I said before, if you have questions, I see you already started to post them. Some questions and comments in the chat. That's very, very welcome. Thank you very much. But yeah, again, if we can get to 75%, that'll be good. Has SARS complied with all dispute resolution time periods on any objection or appeal you submitted in the last 12 months? The last tax period, perhaps. So again, Nico, this one is overwhelming on the no side. Any comments there?
Yeah, certainly not surprising. I mean, that's something we see all the time. And in fact, when you look at the Ombuds report, last year's report into systemic investigation report, he did say that SARS, and I forget the percentage now, but in the majority of times don't comply with time periods. And at risk of hijacking the rest of this discussion, we'll deal into how do you deal with that, because this is probably one of the biggest issues, and there are very effective ways of dealing with it. But yeah, I'm not surprised at all.
Yeah, very, very, very interesting numbers there. So 77% are saying no. The time periods have been a bit of an issue. We published results, so you can all see we hit about 65% on that one.
Well, it's good to see the 23%. We'll give them the credit for that, but the 77% is quite frankly unacceptable. Yeah. And there are ways in which you can deal with that. Very effective ways in that as well. But we'll discuss that later.
Absolutely. Okay, so I'm going to have one more question. It's going to get a little bit more interesting now. We're going to get a little bit more technical. on this. I think one more question, and then we will get up and going. One more question. Additional assessments raised by Sars on any tax type on my company in the last 12 months followed. What was the sequence? What did it come after? An official audit by Sars, a verification by Sars. No audit or verification by Sars, just a random additional assessment. Which was simply raised by Sars.
Sorry, Brian, just give some context to that. So the question really is, most of the time when SARS raises an assessment, it's either following an audit or verification. But I have seen recently SARS raising assessments just out of nowhere. There's no audit, there's no verification. The next thing, and normally people find this out, that there's an assessment when the clearance status gets rejected or as shown as non-compliant. As soon as you start scratching, you say, well, hang on, there's an assessment. I didn't even know about this assessment. And so that's really the third option. I'm seeing a trend in that. So just want to get a feel for the audience as well as to whether this is something that's happening to them also.
Yeah, absolutely. Thanks for setting us some clarity on that. So attendees, tell us what you think. Tell us where you sit with this one. No audit or verification by SARS. Perhaps a verification was done by SARS. Or an official audit by SARS was also done. It followed that type of sequence, as Nico already alluded to. I sense that we might have a three-way split on this one, but let's see how it pans out. And again, if we can hit, above the 60% mark, it would be great. It would be a good sample size to see where we are. And then shortly we'll really start to get into the meat of our discussion and find out a little bit more about how some of these things work. So if you can, chime in. We've got about 55 of us that have responded already. Yeah, there's another 49 or so that are, waiting for Wikus to say something, maybe. And then they will respond. And I think, Roshni, you're saying you have an issue. Okay, that's fine. Let us know. If you are having a challenge, put it in the chat. We can always get to that and fix it. But we're sitting on good numbers now. Over half of us have done. Nico, once again, it's moving slightly. I was suspecting more of a three-way split on this one. What are your thoughts?
No, I suspect that, it's a recent trend that I've seen. So I suspect most of the assessments to follow either verification or audit. Not so much no audit or verification. So I suspect the majority of the weight will sit with the first two options. And in particular, the second option, if I had to venture a guess, on verifications, I suspect.
Yeah. I think so too. So gonna end the poll, guys. Gonna end the poll, and you can all have a look at where we ended. Yeah, close to 50% option 3, 47%, huh?
That's high, and I can almost guarantee that those assessments raised by SARS in 47% of the cases has not been issued in due compliance with the provisions of the TAA. I can almost guarantee you this is something we do all the time, and we know the systems and we know the law as well. And so I suspect that those assessments are all challengeable, irrespective of the merits, probably just on procedural grounds on its own, for various technical reasons that I don't want to get into now. But it is strange to see that higher number of assessments following seemingly out of nowhere. That's odd. But yeah, it's odd, but also it's a good assessment to challenge, because I can almost guarantee you without even seeing the merits, I can almost guarantee you there's a fighting chance there.
Yeah, and a fighting chance is often what you need, right? A fighting chance.
Absolutely. If you give me a fighting chance, I'll win it. That's why we have a success rate.
Okay, awesome. Okay, ladies and gentlemen, thank you for participating in that poll. I think that was very, very insightful in the feedback that we got. Apologies to, I think a couple of people said they were experiencing technical problems, but I think just listen in, stay up close. Wikus, I'm going to come to you actually now, because you've been quiet a little bit, so I'm going to start with you. And just following on some of these frustrations that we've seen on the poll and some of these numbers, What do you feel is perhaps the most common frustration experienced by taxpayers when challenging an assessment or decision? Perhaps a two-part question, and how would one deal with it? Let's start there.
Okay. Now, I think, as was question 2, in terms of the timeframes on the dispute, for instance, if you lodge objection, SARS has 60 days to give it a decision on the objection if they didn't request documents. So a couple of times you don't get your decision in time. So it depends on the type of objection that you submitted and how aggressive you need to be, but you can always escalate the matter internally at SARS, or go to the CMO, tax ombud, or you can probably launch a default judgment application.
Yeah, absolutely. I think because, as Wikus is saying, so the issue is always time. Right, so SARS, there's a time period, and it's almost as if nobody cares in SARS what the time periods are. The fact is that sometimes you can tell you that the time periods are different to what the time periods are that are prescribed in law, especially if you start going into appeal. And so, of course, as Wikus says, either if you deal with this issue, either you're going to do a more of a less aggressive, conservative approach, which sometimes will work, and you would complain to something like the CMO, the Complaints Management Office, or the tax ombudsman. The trouble I have with that is, although it does work from time to time, it takes forever to get resolution. And so there are certain sets of rules that we can allow to force SARS to comply. And one of the ways in which we often do that is to serve a notice of intention to apply for default judgment. Now, that's a tax court process. But oftentimes you'll find after you serve the notice, it's a very effective way of calling SARS to action. And they've got 15 days to fix it, otherwise I can bring the application. So it's, given the circumstances, or depending on the circumstances, launching a more aggressive approach, even though you're not necessarily going to end up in court, it's a very fast way to call into action, because of course, SARS doesn't want to be in court, naturally. And especially not on something like a time period, you know?
Yeah, but Nico, you know, how do I launch an aggressive approach if I'm, you know, everything is done online? Does that mean I need to, you know, look at other structures to do this?
Just repeat the question. What do you mean?
I was saying that if my submissions and everything that are happening, my challenges is everything is happening online, how aggressive can really one go? If you're constantly getting up and down on the emails and the digital platforms.
Very aggressive. You see the issue is there's oftentimes, not always, but oftentimes there's SARS procedure, right, which is one thing, and then there's the law, which is oftentimes something completely different, right? And even if you file online, of course, it's very convenient, but the fact is there are time periods prescribed by law, and you can do one of three things, I guess. You could either just leave them be and wait for eventually maybe you'll get a response, or you can be less aggressive. And even though you filed online, you can go to the CMO or the tax ombudsman, or you can be very aggressive and start launching litigation proceedings. But having said that, I think you'll find that when an objection goes in electronically by e-filing, for example, they tend to abide by the time periods more often than when you have to file an objection offline, because there are still certain types of disputes that has to go through the manual of the old ADR1, ADR2 forms. Those ones tend to take long. And then, of course, the biggest issue of all of them is on appeals, because the tax ombudsman told us last year in his report that the entire appeal process in SARS is manual, you know. And so that's where they tend to miss deadlines often. And that's where you need to be aggressive. And often the understanding as to what the time periods are, if you were to call up SARS for argument's sake and say, listen, what's going on with my case? You call them up and they'll say, no, we've got 90 days to do that. That's nothing short of nonsense. But you have to be able to identify that and know what the strategy is to call them to action. Because if the policy in SARS is 90 days, following internal escalations is not going to work, because that's their policy. The law is something completely different, and so then you go more aggressive. It all comes down to strategy, is to know, you know, where do you need to apply a little Q20 and how to get this thing moving again. But yeah, so yeah, I mean, it's what it is.
Absolutely. And Nico, I want to stay with you. Perhaps my next kind of point of clarity is, you know, what should taxpayers do when SARS, for example, disallows an objection, you know, on very dubious grounds? And who, you know, I suppose dubious grounds is the guy making the submission, right? He's the one that calls it dubious grounds. Perhaps you can clarify both.
Yeah, no, look, that's a very good question. You know, often you'll find when you go through an objection process, the process is fairly set if you follow the objection and appeal process. So you go into objection, and if SARS disallows that objection, then you'd have to file an appeal. Now, oftentimes you get the feeling that you file the objection and SARS then has to send you an outcome letter, right? So then they'll say, for example, they'll disallow the objection. But you can see on the basis on which they disallowed the objection, they didn't understand the objection, or they don't understand the facts, or they haven't even applied their minds to the objection. So what they're doing effectively, if they disallow an objection, look at the basis on which they've disallowed it. If those grounds are dubious, you've got really one or two choices, right? You can either go ahead with the appeal, and 99% of people will tell you, well, you have no other choice. You have to go on the appeal route. We recently won a case in tax court in February this year, where the objection was, the assessments were 200 million, right? So we had to object, and the objection I think was, because it was 120 odd pages, right? It was a massive objection. And when the outcome of objection came back, they disallowed it, or technically partially allowed it. And the question then was, well, do we now force this on appeal? Because it would almost invariably have been an appeal to litigation. And that would have, they're effectively forcing us into litigation by just saying, I'll disallow the objection, but it's clear they haven't understood the objection. So what we did in that case is we launched, on unprecedented at the time, but we launched a default judgment application against SARS for not giving us a proper basis for disallowing the objection. And we ultimately ended up winning the case in total, just on the basis that SARS didn't apply their minds to the objection, and we had managed to do that in 5 months. If that case had to go on appeal, it would have been years and years and years, because it would have gone on to litigation. And so the point is, if SARS disallows an objection, and it's clear that they are doing so on dubious grounds, then there are other options available, which might be more effective than anything else. And I know, as soon as I say start litigation proceedings, everybody goes, no, it's too expensive, I don't want to litigate against SARS. Suffice it just for now to state that in that case we won in February, we got a cost order in our favor. So it ended up costing the taxpayer R0, and the dispute was gone, done and dusted. So either you appeal, of course, it depends on the circumstances, or you launch this other process, but bearing in mind, it's not without risk. There are risks, and you need to be aware of what those risks are should you go down that road. But that's the way in which we dealt with the case recently, and very successfully as well. Yeah. But it happens, unfortunately. You know, you object, SARS doesn't understand the objection, and now you have to go and appeal.
Yeah, and I think that's a good point. That's good guidance as well. That there are risks, but it does happen. So being aware is obviously very, very useful. Wikus, I'm going to come to you now. Just how would you, how to deal with adversely, affected tax clearance status? If that happens, how would one deal with that?
Yes, so that would depend on why your tax compliance status wasn't approved. So, for instance, if you have outstanding returns, either submit the returns, or if you're not able to submit the returns, try and make arrangement with SARS, then your tax compliance status will be approved. Or a lot of times the result of debt. So if that debt relates to a dispute, you can submit the suspension of payment request, then you should get your status. Or if the debt doesn't relate to a dispute, you can always arrange or try to arrange installment payment arrangement with SARS.
Yeah, right. So we just jump onto that. So if SARS raises an additional assessment, right, you're going to owe them money, right? Even if they disallow and assess loss, because nowadays they impose penalties for that. I'm dealing with a 400 million rand case where exactly that happened. But if they raise an additional assessment, there's going to be a debt. So if that debt is the only reason, that debt that you're currently disputing, if that's the only reason why you don't have a clearance, then you can apply for that debt to be suspended. And technically speaking, from the date you file that request, even though SARS might not have yet approved it, from the date you file that request, they are supposed to show your clearance or your status as in good standing or cleared or no tax debt. Even though there would technically still be something on the statement of account, because there's an override mechanism in the TAA that says you must override because the suspension request has gone in. And I know that, again, like I said earlier, there's SARS process and then there's law. So oftentimes you'll find you file the suspension request, but SARS Assistant doesn't reflect it as your status is in good standing or whatever the thing is called. Then sometimes it just takes a properly drafted letter to them say, listen, you're acting contrary to the tier A, you need to fix it. But of course, that needs to be addressed to the right person, it needs to be drafted properly, and that normally solves the problem. But yeah, I mean, the fact is, you have the suspension of payment option available. And in fact, in my office, if you file a dispute without submitting a suspension request, that's disciplinary steps, because that's obvious. You need to file the suspension request at the same time.
Yeah, I mean, that's quite interesting. You say that, and Wikus, and perhaps I'm going to build on to that question as well as we go forward. Is so, and I think we saw this as well come out in one of the poll questions. You know, so most assessments we already know that form the subject matter of a dispute are preceded by either an audit or a verification. But what does one do? If SARS stalls on an audit? I mean, we saw that come through quite significantly. People believe that delays. What does one do if SARS is stalling?
Yeah, so I think the biggest problem with if there's a pending audit verification in the Tax Administration Act, there's no set timelines for SARS to complete the audit or verification. Luckily, there is a service charter by SARS, so that doesn't bind them to complete a verification within 21 business days. But still, they try to complete it within those days.
But then with the service charter, the service charter, as we were saying, is just something that SARS kind of tries to commit to, but it's not something that's hard in law. But then oftentimes you get the frustration that they'll say, the service charter that refers to 21 days is this year's service charter. So in other words, we're not going to deal with last year's verification in 21 days because this 21-day period is for this year. Which is frustrating, but if there's a service charter, I think the point you're making is then you can try and call them to action on the service charter time period. But when I say call them to action, the service charter is just kind of a dream, that's what they hope to achieve. And there's nothing that I can use in law to force them. So the trouble is they don't really have time periods prescribed as to when they're supposed to finish an audit. And to some extent I can understand, right? Because how long does an audit take? But of course they can't take forever because
yes, they can't say. You can always say there's more procedures that you can do. Again, call SARS or speak to the auditor if it's an audit. CMO tax on, but
so something that works well because is as we've seen in the past is when SARS does an audit. And remember, I'm talking audits here, not verifications. They are two separate things. But if SARS is doing an audit, they're supposed to give the taxpayer a progress report. Every, because 90 days, right? We look at that notice. So they're supposed to give the taxpayer a progress report, and that progress report must contain certain things, the stage of completion, the current scope of the audit, etc., etc. So oftentimes, even though there's no time period in which they have to finish the audit, there is a time period within which they're supposed to let you know how far they are with the audit. And so oftentimes, as soon as an audit starts dragging on, depending on our strategy, but what we'll do is we'll just go to the audit and say, listen, by the way, you haven't filed progress reports for the last 180 days. How far are you with this audit, by the way? And oftentimes you'll find that just calls into action. They start looking and working on it quickly. Not always, but really absent any time period within which they are supposed to finish it, that's really all you can do. Apart from launching high court applications to interdict them, to finalizing the thing. But I mean, that's quite severe.
So, Wikus, actually, I think Nico, you're the one who mentioned it, and perhaps you can set our record straight here, because I'm getting a note here. Somebody wants clarification. Audit versus verification. What is the clear difference here, please?
Yeah, right. So, I mean, it's quite an interesting topic, and in my book, it's called The Practical Guide to Handling Tax Disputes. You can get it on LexisNexis's website, but a verification, and bear with me, I know it's quite nuanced, but a verification is not an official examination. For example, a verification is where SARS says, you declared interest of 3,000 Rand. I want to see the IT3 from the bank that says you've earned 3,000 Rand worth of interest. They are simply checking your disclosure against objective or third-party data. That's more a verification. Now, an official examination or an audit, when you start looking at the meanings of these words, an official examination is more directed questions and investigations by SARS. Now, often you'll find that SARS conducts. Let's say they start with an IT14SD, because I think most of us are familiar with that wonderful form called the IT14SD, and I'm being sarcastic, you can't see me smile behind the mask, but SARS often starts with the verification, do the IT14SD. Following that, oftentimes they'll send the taxpayer a request for information, right? And then they'll say, I want you to explain to me why are the legal fees deductible? Why is the deposits not in gross income? Why are you entitled to a 24C allowance? Or whatever the case might be. At that stage, a process that started as a verification, being the IT14SD, changes or morphs into an audit, which is so verification, external data verification, morphs into an audit, directed examinations. And what's more is, as soon as SARS does an audit, there are a whole list of obligations they're supposed to comply with when doing an audit. And that's something that, I mean, when we start doing an objection, the first thing I start checking is everything that happened before the assessment was even raised, irrespective of what the merits are. What is it that SARS adjusted for? There's a whole phase that we go through in my office to say, well, hang on, what happened before this and where's the non-compliance there? Because that brings the lawfulness of the assessment into question, which is a very, very powerful tool. And then you can go into the merit and say, okay, but technically the 24C allowance should be allowed, or whatever the case might be. But to answer the question, what's the difference between an audit and a verification? It's difficult. By way of practical example, a VAT verification, that's a verification. As soon as they start asking further questions, which often happens, I think that changes into an audit, and that kicks in or triggers sections 40, 42, 46, 96, etc., etc. So yeah, it's difficult to answer, but as I said, I do discuss it in quite some detail in my book, which I won't bore you with now.
Yeah, so go grab that book, or just come back on another webinar, I suppose. We could do that. We could have a whole session then. And just the audience, if you have any questions, please put them in the chat. I see you started to put some very interesting questions on there. Put them in the chat. I will try and get to them. We'll try and tackle any of your questions. So just put them in the chat. The conversation is getting nice and heated, so we're ready to proceed and go ahead. Wikus, I suppose maybe, you know, so SARS often kind of withholds refunds, right? Pending an audit. Remember that word, audit, and does not recognize submitted tax return, and then refuses to pay out a refund totally. You know, what can taxpayers do in these circumstances?
Okay, so it depends. Let's say SARS is busy auditing you and it's on a VAT audit and your refund is withheld. It is right that to do it, but you can always tender security to SARS. What also happens in practice, they audit you on one period and not in the next period, but there's also a refund on the next period. That refund should pay out.
Sorry, because that happens, it's happening less now, but following the ombuds. Anyway, but it's happening less now. But the point is that if they're doing an audit on X, let's say that period 2021-06, right? If they do an audit on that period and there's a refund on 2021-08, they can't withhold 2021-08 because the refund or the audit on 2021-06. It's unlawful. They have to release the refund. Of course, that's again the law and procedure, but you have to be able to get them to move from procedure to the law, and oftentimes it takes a bit of an aggressive approach. But the fact is, if there's an audit on a VAT refund, on that particular refund, then they can withhold. The other issue, though, because we've seen recently, maybe just talk about that, is you file a VAT return, right? The thing is filed. On e-filing, you can see that it's filed through e-filing, and the system says it's not filed, right? So when you call and say, where's my money? It's also that you've got an outstanding tax return. And you say, but here's the screenshot, it's filed. I mean, that happens. We're seeing that more and more now, because then they can withhold the refund. If there's an outstanding tax return, they can withhold it, right?
Yeah, and the problem is that refund isn't reflecting on the statement of accounts.
Yeah, because the return doesn't get recognized.
Yes.
Yeah.
But in that case, you can either wait for SARS to recognize the return, which can take up to a couple of weeks, or you can just file a new return. That helps. But the problem if you're going to file a new return, then it's probably going to trigger a verification. Then you have to wait for the verification to be finalized again before you get your refund.
Yeah, so it seems like it's a stall tactic. I stand to be corrected.
Yeah, and I was going to say, because I've seen that happening when you know it triggers that verification and you go to, oh no,
Yeah.
you're not going to wait again.
Exactly.
But The other thing with verifications audits, just to be prepared also for it. So if you, because that also stalls the process. If there's a VAT audit and SARS requests the output tax schedule, and let's call it 20 tax invoices, if you're going to dump the tax invoices on SARS, it is going to take long.
Absolutely, absolutely. I can just add on to that. And Wikus being an auditor, or used to be an auditor, he's come over to the bright side now. But the way in which you respond to an audit is very crucial in, and now I have to be careful because it's probably, and not saying hide anything, not at all. I'm saying how you respond to an audit is crucial in setting up the matter for the almost inevitable dispute or avoiding the additional assessment altogether. What we like to do is we like to give SARS almost like an audit file, right? Cross-reference, back-linked, everything. So that just, I mean, especially if you know there's nothing to hide. Let's give the auditor, make the auditor's job as easy as possible so you can get the thing resolved and move on with your life. I mean, everybody wants to move on, you need the money to come out. Expect that the auditor's life easier, it's going to stand you in good stead. Even if it doesn't expedite the audit, it's going to stand you in good stead, I can guarantee you, when we go on dispute later. So, but let me stop there.
Yeah, and good stead is what we're always looking for. I'm going to go to the chat quickly, Nico and Wikus, and I think it's Giselle that's asked an interesting question here. She says that I filed a suspension of payment before, and when we needed a tax clearance certificate, to refuse to recognize the active suspension of payment lodged. What recourse do we have then?
Right, so first of all, I'd want to check if that suspension was properly filed and whether there's an objection pending, because remember, you can only do a suspension if you're going to lodge an objection or you have lodged an objection, right? So if you satisfy those requirements, then the suspension should simply go ahead. If they don't answer on that suspension request, that's fantastic, right? Let me explain why. If you file a request for suspension of payment, which is properly on record, and they don't answer to that suspension of payment request, then that debt is automatically suspended up until the day they give you feedback. So in other words, up until the day they give you an answer. The section there is section 1646 of the TIA, 164 sub 6 of the TIA that says it's automatically suspended. So in a sense, if you filed your suspension of payment request properly and they're not responding, that's good. If they are trying to take collection steps despite that, and that's where the issue comes in. In those circumstances, really your only option would be to launch High Court applications. But let me just, I understand as soon as I say that, most people go, well, I'm not going to do that, right? So the point is, though, there is a step you have to take before you start instituting litigation against SARS in the High Court. We call it section 11.4 notice. So you have to serve SARS with notice to say, listen, SARS, you're doing something wrong. This is something that I'm going to tackle you on in the High Court. You've got 10 days to fix it. And if you don't, I'll go to court. You have to give them that 10-day period, unless, I don't want to go into the exceptions, but you have to give them that 10-day period. And oftentimes you'll find, because remember, that 11.4 notice needs to be served properly at a prescribed address, and that goes to fairly senior SARS officials in legal department. So all you're doing is you're trying to go over the head of the official who doesn't understand this, get it to someone in legal, at the same time threaten with a High Court application, and that tends to resolve the issue. But having said that, don't launch or threaten to launch applications if you've got dubious merits. You need to be 100% sure that you're right, and then you can do that, and that should resolve the problem fairly quickly.
Yeah, but not all of us know if we're 100% sure on some of that. And I want to stay with you there, Nico, and say that SARS often can declare an objection invalid, right? So what are the taxpayers' options then if they say your objection is invalid?
Right.
What do you do?
So that happens quite often. Sometimes, and mind the word player, but sometimes they declare an objection invalid for invalid reasons. Right. So it's a question of determining whether the objection has been validly declared invalid or invalidly declared invalid. If SARS properly declares an objection invalid within the parameters of what they're allowed to do, then the taxpayer's option is to refile a new objection. You've got 20 days to refile a new objection that's valid. So let me use this example. Let's say you file an objection on the ADR1 form, but SARS says, no, it's supposed to be on the e-filing form, the NOO, notice of objection form. Then SARS says, okay, fine, your ADR1 form, your objection is invalid. you have 20 days to file a new objection using the NOO form. So that's your option, right? You fix the non-compliance, file a new one, and then that should take care of the problem. Oftentimes, however, they declare the objection invalid for invalid reasons, right? And there are various cases where that's happened. Now, what you'll find is, and a good indication of when SARS declared an objection invalid for invalid reasons, is if you can't fix whatever the cause of the invalidity is by filing a new one, right? I'm not saying that's kind of a rule of thumb type thing, but you have to check. So if SARS comes back and they say, but hang on, your objection is invalid because of this, that, and the other thing, and you can't fix that problem with a new objection, then the chances are good they haven't complied. Because what will happen then is they'll say to you, no, you have to file a new objection. So what happens, the taxpayer files a new objection, they declare it invalid again for the same reason, because you didn't fix whatever the cause was, because you couldn't. So you end up in this never-ending deadlock. So you file invalid, file invalid, file invalid. Your objection is going nowhere, right? And so in those circumstances, the tax court rules prescribes a particular remedy available to a taxpayer to break that deadlock. And you'll find, I mean, we did one 2 months ago where they declared an objection invalid on invalid grounds. I told them, if you're going to declare it invalid, I'm bringing a court application. They declared it invalid, which is their choice, I guess. And we brought the application, and the application never even went close to court. They realized the mistake because there's standard operating procedures, which I do understand. It's a very large organization. And then there's the law. And so sometimes you just need to push a little to get them over that hurdle, and then you get the matter resolved. So let me try and pull together that answer. If the objection was validly declared invalid, you fix it by filing a new objection. If it was invalidly declared invalid, then you'd probably have to bring an application. And I say bring the application, chances of you ending up in court are slim to none, right? It's a question of how do you call them to action. And if you go in with the same objection, invalid, you're going nowhere. So then it becomes a little bit more aggressive, and that tends to work. I mean, we settled that case with SARS, because 2 months ago, a month ago.
Yes.
And not only did they then declare the objection valid, they also allowed the objection at the same time, right? Yeah. So technically speaking, what's supposed to happen is they should concede to the case, declare it valid, and then make a decision. But 99% of the times that we worked in cases, they not only declare it valid, but also somehow allow the objection at the same time, so the dispute is just killed in one go.
Yeah. Yeah, very interesting points there, Nico. I want to move on quickly to, and this is coming up in the chat. I think Shingai raised this question. He says, what is the best procedure to apply for a debt compromise to lessen the debt amount and then make an arrangement for the agreed amount? Let me make that a two-part question, because it's very close to what Joan is also asking. Joan is saying, how do I apply for the payment arrangement that needs to be done thereof? Right. And what documents do I need to set myself on the way?
Right, so let me answer that quickly. The fact is, when you do, first I have to make the point that when you apply for a compromise, you are going to SARS and saying, I admit I owe you money, right? So let's say you owe SARS R1 million, and you apply for a compromise, and you're saying to SARS, I'll give you 500, I admit I owe you $1 million, right? But I can only afford 500,000, so could you compromise the balance, right? But you are effectively, by applying, making an admission of guilt, right? I always say, you don't want to be doing that if there's a prospect of challenging that assessment. In other words, I'm not admitting guilt. First, I'm going to tackle this assessment, and if I win, then the debt falls away completely. It's the same to a large extent with a payment arrangement. When you go to SARS for a payment arrangement, you're going to say to SARS, okay, SARS, I owe you, let's say, R1 million. I want to pay, I admit I owe you R1 million. I'll pay this R1 million off over 2 years, or whatever the case might be. So, as you can, I guess, gather, is I'm not in the game of handing money to SARS on a silver platter. I tend to fight the assessment first, and then if all else fails, well, you've got 1 or 2 choices, or 3. Liquidation, compromise, deferred payment arrangement. Those are my last resorts. And to be fair, I don't do that. It's not something I would refer that off to someone else. But I understand that to apply for deferred payment arrangement, there's email addresses on SARS's website. It says debt@SARS or something like that. You'll find it on SARS's website. You just mail them, say you want a compromise or a deferred payment arrangement. They'll send you a whole host of things that they need, including your fingerprints. I'm kidding, it's not that bad, but they send you a whole host of things they need, including, for example, cash flow forecasts, trial balances, financial statements, etc., to see, can you afford maybe to pay 50,000 Rand a month as opposed to the 20 that you're offering. But yeah, it's all on Sars's website. Unfortunately, I can't give you an exact list, but it is there. You can find it there, the same with the compromise.
All right, awesome. It's heating up nicely on the questions in the panel. I'm going to pick up another one. This time it comes from Monique Moses. And her question is, in terms of VAT and pay-as-you-earn deregistration, how soon after deregistration happens do you receive a formal notification from SARS to say deregistration has been completed? And are there any other channels to go through to request such notifications?
Yeah, look, I mean, Wikus and must jump in if you got something to add. I mean, the problem, especially with VAT, is VAT deregistrations are almost more difficult than VAT registrations, right? Not that I do any of those two, but I do deal with people in practice that do all the time. So VAT deregistrations are notoriously difficult to get through. We don't deal with that at all. That's more of a compliance issue, really. But what I can say is, bear in mind that when you do go to the deregistration, especially on VAT, there's an exit charge, right? So when you cease to be a vendor, I think it's section 8.2 of the VAT Act says that you have an exit charge. So if you, and really that exit charge comes down to this. Let's say you bought stock, right? You were a vendor, you were registered for VAT, you bought stock, you sold some of it, some is still on hand, you claim the input tax credit, and now the business has gone belly up, and now you have to deregister for VAT. The exit charge is aimed at recouping the input tax claim on the stock you didn't sell, right? Because you can't use that stock for the purpose of making taxable supplies going forward. So you have to bear in mind that there might, in certain circumstances, be an exit charge when you want to go off register for VAT. In terms of PAYE, I mean, we recently got involved in one for a company. That it does take time, but those are quicker to go through. I can't remember the process you're supposed to follow. Like I said, it's compliance, so unfortunately, it's not something we do all the time or really regularly at all. Really. But yeah, I think that's it.
Thanks for that, guys. And how do you deal with the late objections and appeals? I see this coming up a bit in the questions. Late objections, late appeals. How do you deal with that?
Yeah, so I mean, again, because I mean, jump in if you feel to, but there's a very strict time period within which you're supposed to object, right? And that period is 30 days from the date of assessment. You're supposed to lodge an objection. So SARS can extend that 30-day period, depending on how late you are, if you can show reasonable grounds for the non-compliance, or if you're more than 60 days late, then you have to prove exceptional circumstances that stopped you from filing the objection on time. So you'd have to argue for what we call condemnation, and depending on how late you are, you need to prove that there was reasonable grounds for you to be late, or there's exceptional circumstances that caused you to be late. Now, those are, in the past, we saw that SARS condoned most of the time late objections, but lately it seems like they are less willing or amenable to granting an extension. So if you object, SARS says it's late, right, and I'm not granting condemnation, then you can object to that decision not to grant condemnation. In this week, or was it last week? No, plastics one. Yesterday we had a case where we filed an objection. No, we filed the objection a couple of months ago, but yeah, we filed the objection. They said, and we knew we were late, so we argued. I don't want to get too technical, but we argued that there are exceptional circumstances, especially on the prospects of success. But also we said to them, really, you can reduce the assessment on the 93.1D anyway of the TAA. And they said, no, they're not going to grant condemnation. And so now the next step is to object to that decision not to grant condemnation. We filed the objection again against the decision not to grant condemnation, and not only that they allow that objection against the decision not to condone, but also allow the underlying objection. So sometimes it's really just a matter of pushing back. Now, oftentimes you find cases where, you know, the objection is late and there's no real reason for it. It was just missed. Then we start considering other options at the taxpayer's disposal to challenge that assessment. And the most often resorted to remedy is the section 93.1D reduced assessment request. those are notoriously difficult to get through. We have a set procedure that we follow because I know I'm going to file the request for reduced assessment and I know they're going to decline it. So I know what I'm going to do next by the time I file the request because I know what the answer is going to be. And that tends to work well. But they've recently released, a couple of weeks ago, a draft interpretation note on that particular section, which, well, let me just for now say I don't agree with the views they express therein. I mean, I've got a chapter in the book that deals just with that remedy. But anyways, like I said, I can talk for hours on end. I'm going to stop because do you want to add something?
No.
Yeah. So I told you, Brian, if I stop talking, I'm not going to stop.
Yeah. Tax seems like your daily bread. I ought to get out of the minutiae, but let's see if any of the audience, if you have any more questions, it's a good time to ask them. I see some are still coming up. Sam says, in the case of ATR 12s that kept being invalidated, an objection turnaround gridlock, what application can be made and where? He's talking about ITR 12s.
So I think, thanks, Brian. I think, Sam, that's exactly the point I was making earlier, is when you start ending into this deadlock where you object invalid, you bring an application in the tax court to have the objection declared valid, right? So it's a motion application, it's brought on motion. And that sounds very complicated, and it is. I mean, you have to be careful when you start venturing into litigation in the tax court. But if done properly, you'll never get tax court. You'll have to bring the applications, in other words, launch it, draft it, get it commissioned, etc., serve it on Sars, and then oftentimes, you know, someone in legal will look at the application and say, goodness, we've got no case here, we need to allow it. So that's an option. The other option, I guess, although I'm not keen on that option, is to perhaps try the ombud. I'm just worried that the trouble with the ombud is when you go and complain to the ombud, they can only deal with procedural issues. So if you're going to argue at the ombud now that SARS invalidly declared the objection invalid, they're not going to entertain that because it's a substantive issue, it's not a procedural issue. So really your options are to bring that application, unless a call sorts it out, which often happens. I mean, I always try and avoid litigation, but if you have no other choice, then that's the route you go, and it tends to work quite well.
So here's another interesting one for you guys. It says here, a main contractor VAT vendor who has ceded his contract to another company and they only pay him his profits. How do you account for that when it reaches the main contractor who is a VAT vendor? Does he declare the income with VAT or with no VAT? Interesting question.
So let me just try and get this straight. So you have so the client has a contract, right, with a customer, and he cedes that contract across, right? Is that right? Cedes and assigns, as it were, cedes and assigns the contract across to someone else.
Correct.
It depends on the facts, right? So when you cede a contract like that across, you need to be paid for that, right? You know, I'm not going to sell a contract with R1 billion to someone in exchange for nothing, right? So I'll be getting something in return. It really comes down to discounting your future cash flows to some extent, because a lot of people do that through special purpose vehicles. But the fact is that is a supply, and it's likely to trigger VAT there and VAT for the guy who gets it. So there should be an output input for the guy who acquired the contract, and for this guy just an output tax with his normal input taxes. Again, that's more of an, and I'm not giving advice here because I haven't signed any engagement letters, but that's an issue not so much in terms of a VAT dispute. Of course, it comes a tax dispute, but it does come down to the substantive law, which would likely form the subject of a dispute. And of course, you need to understand that when you enter into a dispute, you need to understand the substantive law. I suspect that you'll have an output tax for your client, and for the main contractor, you have an input tax and an output tax for receipts. Something I need to check in a little bit more detail, but I think that's the gist of. I hope that answers your question.
Thank you for that. We are at the top of the hour. A couple more questions that I want to probably squeeze in quickly, if you allow me, Nico and Wikus. Sure. The first one is, please remind us, what is the title of your book? And the second question is, when do I approach the tax ombud?
Right, okay. So first, the title of the book, it's called The Practical Guide to Handling Tax Disputes. You'll find that on Nexus's website. And then the next question was what again?
Tax ombud.
Oh, tax ombud.
All right, so I'm going to try and explain this. For me, it comes as kind of second knowledge, but I understand that it's difficult for me to explain. So the tax ombud can engage taxpayers on service-related issues, right, or procedural issues. Let me put it this way. Let's say you object to an assessment and SARS doesn't stick to the 60-day period in which to give you an answer on that objection. Whether that answer is to allow or to disallow the objection is irrelevant. It's just they don't come back to you. That's something that you could go to the Ombudsman to, but you first have to exhaust internal remedies. In other words, escalate in SARS, get the escalation number, go to the CMO. The CMO doesn't resolve it, then you can go to the Ombudsman, because the Ombudsman would have then the mandate to deal with that service-related issue or procedural issue. You cannot go to the Ombudsman with substantive disputes, right? So let's say SARS raises an assessment and you're not happy with the assessment. You can't go and complain at the Ombudsman that SARS now raised this assessment. The Ombudsman's going to say to you, well, object. That's what the objection remedy is there for. I can't entertain that. Or, for example, you object, SARS disallows the objection and you're not happy with the fact that they've disallowed it. The Ombudsman is not going to entertain that. That's not his mandate. So that's something that you need to then follow the appeal process. So really, in a nutshell, I think the answer is you can go to the Ombudsman on service-related issues. What that is often difficult to define, but that's what it comes down to. But you have to exhaust internal remedies first, escalation internally, CMO, tax Ombudsman. There are cases where you can approach the Ombudsman directly in exceptional circumstances, but to be safe, you follow that process, which is, by the way, one of the reasons I don't often go down that route, because it takes forever. A default judgment is quick and it gets the issue resolved, but let's stop there.
Awesome, awesome. I know we can have this conversation for long. It's tax after all. Nico Theron, Wikus, Swart, Unicus Tax. Thank you very much for giving us much required insights on how to deal with your tax frustrations at SARS office. So thank you, guys. I'm sure we will catch up at some other point. Ladies and gentlemen, and that's it. We're at the top of the hour and just past, in fact. Thank you for sticking around. Thank you for the great questions and for attending this session with these two gents. Next up, we've got MTN case study, risk and remediation, build a risk intelligent culture. We've got Oracle and see what they've done together in creating a business risk intelligent culture. Follow that on the 16th of September. We're accounting for never normal world. Imagine how things have changed. We're talking tax, we'll talk an accountant on the 16th. So join us when we have Blackline on the call. With that, I'd like to bring this session to an end. Nico, Wikus, thank you very much and have a wonderful afternoon.
Thanks you too. Thanks everybody for listening. Keep well.
Cheers.
Cheers.
Bye.